He had the perfect setup. Momentum was on his side. Structure confirmed. All signals aligned. But he hesitated. Not because he doubted the trade, but because he feared the loss. And in that split second of fear, his edge meant nothing. Most traders think they need to be right to win. That success comes from calling the market perfectly, predicting tops, forecasting bottoms, being smarter than the average participant. But here's the truth no one tells you. You don't need to be right. You need to be ready to be wrong. Until you fully accept that risk is unavoidable, until you can step into a trade knowing you might lose, you'll never reach your potential. Because the market isn't your enemy. Your resistance to losses. Fear doesn't come from price action. It comes from your attachment to the outcome. The candle doesn't scare you. The loss does. Not the chart. The meaning you attach to the loss. I'll feel like a failure. I knew I shouldn't have traded. This always happens to me. So you hesitate. You skip the trade. You fidget with your stop. You size down, too late. And then, paradoxically, you get the very result you were trying to avoid. Loss. But now it's mixed with regret. Imagine having a 70% win rate system. That means you'll still lose 3 out of 10 trades. Now imagine not being okay with any of those losses. What do you think happens? You second-guess those 3 trades, then start second-guessing everything. And instead of letting your edge play out over time, you try to control the outcome of every individual trade. That's not trading. That's trying to cheat the game. And you can't cheat probability. In Trading in the Zone, Mark Douglas writes, "Until you accept the risk, you will always be susceptible to making errors." Why? Because when you fear the loss, your decisions become emotional. And emotional decisions destroy consistency. You hesitate on valid setups. You take profits too early. You let losers run because cutting them feels like admitting failure. Douglas explains that accepting the risk doesn't just mean knowing you might lose. It means feeling nothing about the loss, before, during, or after. It's not passive resignation. It's emotional neutrality. Danielle was a disciplined trader. Or so she thought. She journaled, backtested, demoed for 6 months, then went live. But something strange happened. Every time she placed a trade, her hands shook. She hovered over the close button. Sometimes she'd enter, only to exit seconds later for a tiny loss, just to escape the discomfort. Other times she avoided placing the trade entirely, even when her system flashed green. What? Because she hadn't accepted the possibility of loss. She was trying to trade in a way that guaranteed no pain. She wasn't using a strategy. She was using a survival mechanism. Until one night, reviewing her trades, she realized something gut-wrenching. Had she followed her plan, she would have made over $900 that week. Instead, she was down $40. Not because the edge failed, but because she failed to let the edge breathe. So she made a decision. She wasn't going to avoid pain anymore. She was going to lean into it. And it started with one practice. Visualizing the worst-case scenario before every trade. Not to scare herself, but to desensitize the fear. Each time she asked, "If this loses, can I accept it without spiraling?" If the answer was no, she lowered her risk until the answer became yes. That was her turning point. If you're scared of losing, your position is too big. It's that simple. Most traders think fear is a mindset issue. But often, it's a math issue. If a trade keeps you up at night, you've risked too much. If a trade makes you angry when it loses, you've risked too much. If a trade defines your mood, you've risked way too much. True risk acceptance isn't possible if the consequences feel threatening. So shrink the risk until it's boring. Until it becomes just another sample in a large data set. Because that's what trading really is. A game of large numbers. Not a game of this one trade. Think about casinos. Do they panic every time someone wins big? No. Because they understand the edge. They size accordingly. They play the long game. And they always win in the end. What? Because they've accepted the risk, systematically. You should too. Here's the trap. 1. You fear loss. 2. You hesitate or mismanage the trade. 3. You lose, or miss the win. 4. You feel regret. 5. That regret fuels more fear. And the cycle repeats. This is why most traders burn out. not from losses, but from emotional fatigue. The solution? Break the loop with deliberate risk acceptance rituals. Journal your worst-case trade and why it won't destroy you. Set maximum daily loss ahead of time, and follow it like oxygen. Say out loud, I am prepared to lose this trade and it doesn't define me. Use risk per trade that feels boring, not exciting. Because when trading feels boring, you're getting close to mastery. Traders love talking about reward. The 2R, 3R, the 5R win. But most avoid talking about risk, because it feels negative. That's a mistake. Because your relationship with risk is your relationship with the market. You're not trading price. You're trading uncertainty. Risk isn't just a downside. It's the entry ticket to the upside. If you want the reward, you have to make peace with the risk. And not just tolerate it. Welcome it. Plan for it. Thank it for giving you access to the game. Only then will reward stop being a fantasy and start being a reality. Here's how you know you've accepted the risk. You can place the trade and walk away without checking. You lose a trade and feel nothing but curiosity. You win a trade and don't feel invincible. You size your position based on logic, not emotion. You don't take it personally when a setup fails. And most importantly, you stop trying to avoid losses and start focusing on executing flawlessly. That's the mark of a real trader. Fear of loss is not weakness. It's a signal. A signal that your identity is too entangled with the outcome. Detach. You are not your trades. You are not your P&L. You are the executor of a system in an uncertain environment. The market doesn't reward bravery. It rewards neutrality, precision, discipline. And those qualities only show up when you've accepted the truth. You will lose. And that's okay. Because you don't need to win every trade. You just need to show up, take the edge, and let time do the rest. You're not free until you can lose and stay calm. You're not consistent until you can execute, without needing to be right. If risk still makes you flinch, you haven't accepted it. And if you haven't accepted it, you'll never trust your edge. So shrink your size. Plan for the loss. Then trade anyway. If this hit home, stop chasing certainty. Start chasing mastery. And that begins with one question before every trade. Am I okay if this loses? Not, lower the size. If yes, click the button. Because winners aren't fearless. They've just learned to respect the game and play it anyway.